welcome to what is the first of what I hope will be a lot of conversations and clinics of this nature. We're a small gathering. My request is going to be to you that even if you don't like it, you tell your friends you did like it, so that in future we've got more people come to these things. This is an important event. It's something that has proven to be successful around the world. Countries like the US, Canada, the UK, Australia has been doing this. The idea being to position the financial planning profession and what it is that financial planners do for consumers. So we're going to spend a bit of time on that this evening. I'm going to try and make up a bit of time because we've kept you waiting, and our apologies for that. So what I've really been asked to do is just to take you through the who's who in the industry, just very briefly, so that if the guys refer to different people and different bodies, that you've got some ideas as to who those people and bodies are. How do I move? Okay, so those are the things I need to briefly cover. I need to explain those terms up there. I'm not going to necessarily cover or speak to everything on the slide. You can have a look. Please put up your hand, shout at me if it doesn't make sense. And here and there I'll ad lib and just drop in some additional things. Just firstly, who are we? Who's the Financial Planning Institute? Well, we've been around for 30 years. All the detail is up there. We're the professional body for financial planners. And our main goal is to promote that profession to the benefit of all consumers in South Africa. That's what we're about. So I'll take you through some of the things that we do in my brief few slides, and so will my colleagues to explain better what it is that we do. You can see there, and I'll touch on that we're a founding member of something called the Financial Planning Standards Board. So we've got international affiliation. So the financial planners here, or the financial planning members of the Financial Planning Institute, subscribe to international standards. Not only do we subscribe to those, but I'm proud to say that we lead in the development of those amongst the countries who are members of the Financial Planning Standards Board. The CFP mark, which stands for Certified Financial Planner, was brought to South Africa in 1998, then on license from a body in the United States that owned this mark. They subsequently sold it to the FPSB, which is the worldwide body outside of the US that owns it. We see this, and there's agreement in 23 countries around the world, as the highest professional designation for financial planners. So when you go out there and you see something like CA next to someone's name, which is an abbreviation, as you'll know, for Chartered Accountant, CFP is something positioned in the same league or in the same category. It's a designation of excellence for financial planners. It's not a qualification per se, it's backed by qualifications that allow you to then apply for CFP recognition. Now, what is important to us, and it's on the slide there, is that the requirement to be a CFP professional and to remain a CFP professional is higher than that to get a license to practice under the regulation that applies in South Africa. In other words, each and every person out there who gives financial advice has to have a license from our regulator, so do our members. Our members, however, have put up their hand and said, that's not good enough. I want to do more. I want my peers to review me. I want to subscribe to a code of ethics and a code of conduct and a variety of other subsets. And I'll comply with those. And if I don't, the FPI may sanction me. And when the FPI does that, the financial services regulator will sanction me. So it means the guys are saying, I choose to set a higher standard. I want to be held to that. I want people, my clients, to complain. And when they do, I want the FPI to enforce that, and we do that. So all our guys have done that, have said that. So you can imagine, if you put yourself out there to do that, you've got your clients on your mind, you're putting your clients first, you're subscribing to the treating customers fairly principles that we hear of in the press. Now, just very briefly, referring back to the FPSB, just so you get some more sense as to who they are. They're a non-profit association that on an ongoing basis globally try and get everybody together to follow the same path, to put the same principles in place, to have the same general codes of ethics, codes of conduct, so we can all learn from one another. So all the things that FPI brings to its members, we've already discussed at FPSB level. We've either introduced it there ourselves or someone else has introduced it, and we've agreed it's a good thing to follow. So you get that benefit of an internationally recognized approach to financial planning. I've already said they own the mark outside of the United States, and we're the licensing authority then in South Africa, which means that we have to protect this mark with rigor. So if anyone's out there saying, I'm a CFP member, and they're not doing the right thing, we will take action against them. And one of my colleagues will speak to that in a few minutes' time. And as I mentioned, there are over 20 countries who are members of FPSB. Now, if that's the case, if we're the professional body and we subscribe to this international overarching body as to 23 others, and therefore all our members, who is the Financial Services Board? The Financial Services Board is a creature of statute. In other words, they were created by an act of Parliament. So they're the official regulator. They've got powers given to them by Parliament. So they're the guys who license all financial planners. They're also the guys who happen to license all product providers, the guys out there who sell unit trusts and life policies and things like that. And they then regulate them. So they say, if you have a license, these are the rules you have to comply with. This is what the Act says. This is what we'd like you to do over and above that. And they regulate them. So you've got two sets of regulators where Financial Planning Institute members are concerned. You've got the FPI itself and you've got the FSB. Now, the FSB is, as it says, they're committed to promote and maintain a sound financial investment environment in South Africa. I think it's worth pausing there for a second and saying they've managed to do that, as has our South African Reserve Bank. They've managed to do that and protect us from a lot of what's happened in the rest of the world over the last 12, 18, 24 months, and they've done well. And you'll see that the FSB currently has a mandate to look after the non-banking sector. What government has said is they want to change that. They want to make them the body that looks after all market conduct. So pretty much the guy who checks if everyone is behaving. And that will include the banks. And they'll take prudential regulation, which is the regulation that says, have you got enough assets backing you? In other words, if you want to be a life company, have you got enough capital in the bank? They'll take that away and put that with the South African Reserve Bank, who currently regulates banks. So the thing about the FSB and our work with them, which is extremely, extremely encouraging, is that we've built very, very good relations with them over the last 5, 6, 7, 8 years. We work with them, we see it as a partnership. They see all the members of the FPI as their partner. So we don't have an adversarial relationship with the FSB. We're not afraid of talking to them. They're not afraid of talking to us. Not that I'd know why you'd be afraid of talking to us. We work with them to develop, in the best interest of consumers, the financial planning environment. What is very encouraging then, looking at that, is that we've been talking for the last few years as an FPI saying, this is what a professional body does. This is what a financial planning professional is, as compared to, and I'll distinguish now, someone who sells a financial product. And we've been speaking to the regulators for some time, and the regulators have come out with, during the last year, legislation that prohibits conflicts of interest, which is fantastic, which means that if I sell you a financial product, the financial planning or the financial product house can't give me a trip to Mauritius in return. Those things can't happen. We can't have training sessions in the Bahamas anymore, as nice as that sounds. We need to avoid conflicts of interest. They've done that. They've come out with an initiative called Treating Customers Fairly, which again is a fantastic initiative. It simply says that there will be 6 outputs, fairness outputs, and you'll have to be measured against those outputs if you're a player in the financial services industry, which, trust me, is a lot better than saying, have you done the following 4 little things? Tick the boxes, given the guy a form, and he's done that. It's fairness outcomes. It's, did you get up this morning with putting your client first on your mind? Did you get up this morning to do the right thing? That's what you'll be measured against. It's something that's been implemented in the UK with a tremendous amount of success. It's had huge impact on the financial planning environment and the financial services provision environment there. And the FPI is closely involved with the FSB in developing the TCF framework. Another nice thing from our perspective that's come out in the last week or two is a discussion document that talks to how intermediaries, as the FSB calls financial planners and salespeople, and again I'll distinguish now, how they are remunerated. And what they're saying in there is that they would like to see a regulatory framework where we've got a clear distinction between paying for advice on the one hand and paying for products and administration thereof on the other hand. So very clear. So not someone who comes into your home or phones you up on the telephone and says, listen, I've got a fantastic thing to sell you. On the one hand, we need professionals who say, I've got an advice value proposition. If you want to come to me, I'll help you identify your goals and your needs. I'll help you understand those in great detail. I'll help you set up a plan. And a colleague of mine will talk to the exact process that's followed. And then I'll help you as a guide with that plan, take that plan through your life. So it's a real living plan. That's an enormous amount of value, and you pay for the advice. Separately, you can pay for product implementation. So the advice might be save some more money, because we are told constantly, correctly so by the Minister of Finance and others, that we don't save enough. So the advice might be that, to invest in a product, but that's not going to be the primary purpose of the engagement with a financial planner. So there's a lot of work being afoot from the Financial Planning Institute's point of view on that, and the FSB is now picking that up in regulation, which is fantastic. Very briefly then, current regulation is something called the FASE Act. I had an extremely weak joke 10 years ago when this thing came in, but I'm going to tell it in any case. It is even weaker now, and me having said that means you have to laugh. FASE is not the first African in space. It's the Financial Advisory and Intermediary Services Act. It talks to advice as it relates to financial products. So in other words, how can I advise you about what a unit trust is or what a retirement annuity is? So it doesn't go as far as, in our view, regulation should go to regulate professional financial planning. It talks to product, but it's good legislation. There's a statutory duty in there of fiduciary care, which is fantastic, and we've seen the Ombud rule on that duty. In other words, not just saying, did you disclose commission or fees, but saying, did you give advice with due care, with diligence, by putting your client first, which is where we want financial planning to move to, and which is the interaction we want you as consumers to have with financial planners. Just very briefly, as I mentioned, the Act requires that providers are licensed. So any financial planner who interacts with you will have a license. He will show you the license. He'll explain what he's licensed for. And as I said, it applies to anybody that offers financial advice or renders what they call intermediary services, which is all the stuff around it, all the admin, all the forms that they complete. So that's the Act that currently regulates us. So a whole bunch of things that I'm just briefly explaining to sketch the industry that we operate in. And then last but most definitely not least is someone called the FASE Ombud. It's also a statutory creature, something created in the Financial Advisory Intermediary Services Act. And the role really of the Ombud is to resolve disputes cheaply, fairly, quickly. So you don't have to go to High Court, you don't have to get an advocate, you don't have to pay lots of money. It's to go on a fairness principle, have the dispute resolved. So as a consumer, you can go to the Ombud. The Ombud has got jurisdiction up to certain amounts and within certain areas. You can tell them what went wrong. As long as it's something that fits into advice or intermediary services, they'll sort you out quickly. A colleague of mine will talk a bit more around what you can and cannot do if something has gone wrong and you want to complain or ask for assistance in that regard. Okay, so what I've done quite quickly, and I hope to make up a bit of time, is just sketch the scenario, tell you who the role players are. So what my colleagues are going to do is they're going to take you through the financial planning process, give you a sense of what exactly, in slightly more detail, I've been alluding to what it is that financial planners do, and they'll touch on one or two other important aspects of financial planning. Are there any questions on what I've just rushed through in 15 seconds? And I have to admit, this is something that if they give me 3 hours to talk on, I can talk on for 3 hours, 3.5 actually. People would start leaving, they'll throw things, they'll be tired.